Hey traders, Money Badger here with Badger Trading University, and I'd like to welcome you to our official YouTube channel. If you haven't already joined the BTU Discord, simply click the link in the video description below. As we begin to share content on this channel, we will focus first on technical analysis. Unlike fundamental analysis, where traders focus on external factors outside of price action to determine the intrinsic value of an asset, technical analysis allows traders to examine an asset's historical data, such as price and volume, in order to predict future price movement. Technical analysts believe that the market price of an asset already reflects all known information available. The three main elements of technical analysis, which we will later discuss in greater detail, include technical indicators, chart patterns, and candlestick patterns. Technical indicators are based on mathematical calculations of historical data that alert traders about a trend, predict future price movement, and confirm trends or patterns. It is important to note that there are two specific types of indicators. A leading indicator provides trade signals prior to price movement, whereas a lagging indicator provides confirmation after price movement. Chart patterns are shapes within a stock's price chart that help to predict price movement based on what has happened in the past. Traders can identify these trend reversal and continuation patterns in order to find possible trading opportunities. Candlestick patterns are certain movements in price shown graphically as candlesticks that also help to predict future price movement. A candlestick pattern consists of one or more candlesticks and will fall into one of three categories: bullish, bearish, or neutral. Once traders have a good understanding of technical indicators, chart patterns, and candlestick patterns, they can begin to implement Confluence Trading to produce higher probability trades. Confluence basically means using multiple trading signals to confirm an entry or exit. For example, if you take a look at the chart shown here, I have identified 4 buy signals confirming a high probability trade. First, you notice the technical indicator known as the Chaikin money flow produces higher lows into positive territory. Next, you see a MACD golden cross, where the MACD line crosses above the signal line, and both lines then cross above the zero line, which is an even stronger signal. Then, you notice the first candlestick closing above all 3 EMAs, or exponential moving averages. And lastly, price action formed a strong bullish candlestick pattern known as 3 white soldiers. Having more than one trading signal is almost always a must. The more elevating factors you can stack prior to entering or exiting a trade, the more conviction you will have behind your execution, and the higher probability that the trade will follow through as expected. Again, it is extremely important to note that most indicators, chart patterns, and candlestick patterns are not meant to be used by themselves to make trading decisions. Trading with Confluence can strengthen your risk management and prevent entering or exiting a trade based on a false signal. Now, I know that was a lot of information to digest, but if you truly want to reach your investment goals and objectives, it will take some time to learn the tools of the trade. Your dedication and determination, however, will pay off, and you will be a much better trader for having put in the time and effort in doing so. Just wanted to thank you all so much for watching and stopping by. If you enjoyed the video, please like, subscribe, and join our Discord by clicking the link in the video description below.